We're watching big tech results, both Microsoft and Alphabet reporting moments ago. Joining us now, Ted Mortensen, Bayer Technology Desk Sector Strategist. Ted, let's start with Alphabet here. The initial reaction, Ted, investors seem a bit disappointed. It got the stock down about 4% in the after hours. Give me your response, Ted. What'd you make of the print?
Well, first of all, these are essentially for both Microsoft and Google somewhat inline expectations. And I think the amount of run that a lot of these stocks have had since November really pointed that a lot of these names, especially the cloud titans, had to see a top line beat. So if you look at Google, for example, search basically came in line. People were looking for, I think, a little bit better than that. The positive, I think, is GCP, where they returned to growth at about a 25% cliff versus a disappointing report last quarter.
When we look at the ad sales number, which seems to be also maybe a little bit of a source of disappointment, what were you expecting on the ad front? I mean, I was seeing a lot of positive chatter about relatively strong spending there.
We were roughly pretty close to the street at a total advertising of 65.8. Again, the street was looking for a little bit better. It's still a relatively solid result. And if you look at search at 48 billion, that really came in line. And that's where, from a longer term perspective, people are really focused on this move to generative AI in relationship to not only some of the private companies that are 2 or 3 years out, but also Microsoft moving with the generative AI place into search. So that seems to be a very big focus longer term for the street, where Google has had basically a monopoly on search. With generative AI, you've got different players at least trying to dethrone them in some way.
Yeah, I mean, I'm interested to get your take on that, Ted. I was talking to Julie about that as well, just how you think about AI and how it could very well potentially upend, kind of redefine Google's bread and butter, which is search.
It will over the next 2 to 3 years, but this is nothing instantaneous. And I think when we see the Meta results and the Google results, they're still of the two dominant players in advertising. They will be for the next quarters to come. Obviously, Microsoft with their investment with OpenAI, the search landscape will change. There's some private companies like Perplexity that has gotten some good press lately. Over time, you may see additional competition. There's others that also could move into this group, like even an Apple or an Amazon or a TikTok, as they get scale on that data layer.
Ted, I'm looking also at YouTube revenue here. It looks like rising to 9.2 million in the fourth quarter from about, we'll call it a little under 8 million a year earlier. It's sort of a fascinating asset for Google. Where do you think they develop it from here? Does AI feed into that? And at some point, do we see a Google that separates YouTube?
That's a really good question. I don't think anybody really knows at this point, but the 9.2 is a very solid result. Obviously, I think Google TV is taking share from some other players, whether it be direct TV streaming, et cetera. It's a good offering. It's tied to the Google infrastructure, and quite frankly, from a technology standpoint, it works extremely well. So, but as they gain subs and add content and gain that data, it is an arrow in their quiver, quite frankly, on growth that cannot be underestimated.
Ted, final question about Alphabet. It had a nice run into this print, Ted, I think in part because there was kind of this general optimism, Ted, about the advertising environment in 2024. Do you share that optimism about the ad market?
I do. I mean, our checks have been pretty constructive. I think through the tail end of the rest of the 2/3 of earnings, you're going to see generally advertising budgets being solid, and then you move into a year of 2025, not only with political spend, or 24 with political spend, but our checks have been relatively constructive on the ad spend, and I think that we'll see some very good results out of Meta when they report.
Interesting. All right, let's turn it on over to Microsoft for a moment here. And it looks like, by the way, the shares have actually turned higher in after-hours trading, I believe, after an initial kind of dip here. The company, as far as we could tell, beating on most of the metrics here. And also, as I kind of pointed out a little bit tongue-in-cheek, Satya Nadella, the CEO, saying AI 3 times in his sentence in the release here. The share is actually little change right now, so let's call it bouncing between gains and losses. So what's your sort of high-level takeaway here when we look at Microsoft?
Well, if you look at most of their results, are in line. I think the standout is the Azure growth. They don't break in. They're hosting essentially all the OpenAI infrastructure. So a 28% constant currency when they guided to 26 to 27 is pretty powerful. And as you look at their, and this is why we have to listen to the call and also the guide, the street's very, very focused on how Satya and the team monetize generative AI from an ASP perspective. That's into Office, that's into all their Copilot offerings, whether it be on the developer side, whether it also be on Office 365. Their whole product line is being AI enabled. So the $1 million question is some of the metrics that we'll get if enterprises are willing to pay an additional fee per seat to get that AI functionality. I think it's just a matter of time. It's not a matter of if.
And Ted, another, of course, very important variable for Microsoft is the PC market in 2024. I know that's a source of some debate on the street, what the trajectory of that market looks like. You know, what would the more positive PC cycle mean for Microsoft, Ted?
Well, listen, we're going into when you put the Gen AI infrastructure into place, and we're doing it right now. I mean, you looked at results like last night with SMCI, just absolutely annihilating the number on servers. But as you go forward, we're going to have to upgrade not only handsets but the PC, and we're going to start hearing this term of generative IoT devices, and that essentially in the 25-26 timeframe, you're going to have to see most of PCs being upgraded to have Gen AI functionality. That what that means is you're going to have a combination of GPUs, CPUs, and other accelerators on that next generation PC, where that actual what's called smaller language models, or SLMs, will execute, and they'll execute on the device. So Microsoft is in the pole position to leverage, not only through Azure, but that the Gen AI PC cycle, where every PC in the world eventually will have to be upgraded. And then on the handset side, that's no different. And that's where names like Qualcomm come into space, and we'll see their report tomorrow. But we're moving to a Gen AI IoT environment, and the architectures are changing. And a lot of these large cap companies are extremely well positioned to leverage their R&D and free cash flow to make it happen.
And Ted, I'll get you out of here on this. Final question about Microsoft is that gaming business. And I know, Ted, relatively smaller part of the overall business, but of course, Satya Nadella made that big acquisition for Activision. How excited, Ted, do you think, Microsoft investors listening right now should be about that gaming business?
Well, they've got huge scale from a cloud perspective. And I think also from a synergy standpoint, the amount of OpEx they can take out of Activision, is relatively massive. And so when you put it on Azure's infrastructure and look at where gaming is going, I don't think we'll see many console cycles left. And as it transitions to the cloud, again, this is another arrow in Microsoft's quiver that could conceivably not only increase free cash flow meaningfully, but also be additive to operating margin as they get scale and put the combined entity in more of a next generation OpEx footing.
Ted Mortensen, thank you so much for that quick reaction there to those big earnings. Appreciate it.
All right, thank you.